Okay, folks, thanks for being here. This is Harry Boxer. My site is TradeOutLoud.com. It's been around since 2001. One of the first sites ever. To be live on the webinar, live on the internet, doing webinars and giving live stock trades. It's a really unique site with several hundred people on every day, and mostly doing day trades, but I also provide swing trades. It's just a quick review. That's me, and we basically feel like we're one of the best sites out there for active day traders who trade technically. I'm a technical analyst. I've been doing this for almost 60 years. I'm 75, and I love doing this stuff, and I love teaching people. One of the things that people tell me when they come into my site is like being in my site for 2 months is like being 2 years in a classroom. That's because I demonstrate minute by minute via live webinars all day what the charts look like, how they're developing. I explain what the patterns that are developing are and what they usually result in. I'm a trend follower. I'm a momentum trader. I believe in price volume surges. I believe that stocks will start their move with a combination of price and volume at the same time. A move in price is not good without volume, and a move with volume that doesn't show price obviously is no good either. So what I want to find is stocks that are moving suddenly, coming out of a base, coming out of a consolidation pattern, something that's triggering that stock to make a move. And usually, when we're day trading something like that, and it's a big move, it results in a longer term move. And as a result, I would say the vast majority, 90% of my swing trades came from a former day trade that triggered a trend, and the trend was so strong that I ended up putting a swing on it, some which were more than 1,000%. For example, NVIDIA, a couple of years ago, or 3 years ago, I put it out at 39 at first as a day trade, then later as a swing trade. And as you know, the stock went into the 600-700 range and split. It's not atypical. We have a lot of stocks that have gone up 300, 400, 500% over a period of months to a year or two, and that's what I specialize in: stock picking, finding trends at the beginning. And the reason I'm here today is not just to talk about stock, but I've been told by dozens of people in my room they have greatly benefited their lifestyle and their financial condition by buying call or put options on the stocks that I've either put out as longs or shorts. I believe that stocks form patterns in all time frames. I think those patterns like coils, flags, triangles, trend lines, moving averages, all the stuff that most technical analysts follow is something I've studied for 5 decades. I wrote a book on it on trading called Profitable Day and Swing Trading from Wiley. And I'm a big believer that keep it simple, stupid. When you see my chart, you'll see there's very few technical indicators on. Just I have 3 moving averages, and I have 2 technical indicators on the bottom of the chart. I've gone through many of them. I think that too much noise is confusing. I'm a big believer in being on top of things as they move. The beauty of my room, for example, and one of the reasons I'm inviting everybody into my room, you can start a free trial, by the way, by just clicking on that button to start a free trial, okay? And then you'll be able to get into my room by simply filling out email, first name, last name, password. No credit cards required, none. You can come in for 2 weeks for free, and most people who do that make enough money to pay for at least 2 years worth of the membership. So that's my little spiel about the TechTrader.com. I'm real proud of my site. There's my daughters, by the way. I'm a big believer that people need some guidance, that once you learn what you need to learn, the reason why you're in my site is not because you want to learn, because after a while you've learned it, because you want the camaraderie of the dozens and dozens of very astute, knowledgeable traders that not only collaborate, but they also are mentors. And if you're new to the trading world and you want to learn about technical analysis and day trading or swing trading, I invite you to come into TechTrader.com and check out our site for a couple of weeks for free, no obligation. I think you'll be pleased. I think something like 3/4 of all people who signed up for free trial ended up being a subscriber. So that's my little shtick there. Today I'm going to talk about the kind of stocks that I pick and why, And we're going to show you how that might have affected some of the options trading around it. Now, like I said, lots of people in my room trade options around my picks. I'm simply a believer that if a stock breaks a certain pattern, like for example, today, ZYXI, a low price stock that I've been talking to David and other people about for the last month. Here's a stock that I followed back in here, again in there, when it broke out of that pennant. I was scrolling on it right there and broke through the double top. I went long a big chunk of stock at around 6. I sold most of it at 10 there. I got up to 13. And then backed off and consolidated. When it broke out here, I bought some more in the 13 range. And you can see it went more than double to about 28. Over the course of the last year, like most tech stocks, 1, 2, 3, 4, 5 waves down, basic Elliott wave stuff. From the V bottom of the platform, broke out, but couldn't get to the resistance, which was technically right there. Pulled back and falling wedge and started to move again. When this volume bar came in, that's where I really got long, around 660. Jumped up to about 7 3/4 and backed off for 3 or 4 weeks and consolidated. And today was a significant day. Traded 1.5 million shares, moved up about 17%, and it broke out of the base pattern, which I believe would lead to moves to the 10-11 range. But basically, I'm looking for mid-teens at least on this move over the next few weeks, maybe even quicker than that. The beauty of an option, for example, and by the way, I love TC2000. It's the best charting service out there. I love crisp colors on a black background. It just jumps out at you and you can see it. Now, I trade 1-minute charts. This is a daily chart for intraday day trading. For example, take a look at Zixi intraday today. Let's get out of here for a second. How about that chart? I put a day trade on it today when it broke out right there at 790. And most of us sold the stock at 9 or better today. It got up to 923. Backed off and very strong chart. This is a tremendous move for this stock. I've been watching it for weeks. The fact that it went from 7,670 to 920, $1.50 in 3 hours, I thought was significant, not only because it broke out above the resistance, but it did it with its biggest volume in 4 months. And this is what I look for, folks. I look for stocks that are just coming out of a base or downtrend or lateral price resistance. And notice also, and this is a key for any technical trading, if the moving averages are crossed over and are moving down, it's a short, thus this. Once the moving averages cross over and the stock pulls back and then moves again, that's why I bought it here. When it breaks through the lateral price resistance right there, today, this is a significant breakout. You could have easily, when I first recommended this stock at 6 and change, which most people in my room do, I've taken a look at this option chain when it was 6 and change. These 7.5s were trading at pennies. I believe they're upwards of, the 5s are 3.5. The 7.5s are 110 by 240. They were up 20 cents. So that has gone up on the area on the order of 1,000% on a very short move in a stock. If this stock goes to 10, 11, 12, or 15, like I think it might, the 7.5 options could be dramatically much higher, even at $5 or $10 a share. We'll see. The bottom line is, though, this is the typical move that people in my room are making based on my stock picks. If you don't want to buy the stock, but you want a cheap entry into stuff like this, for example, right now, let's go back to that moment. Right now, it looks like the 10s, and we're not that far away, $1.15, are for July, that's a put, excuse me. The calls, the August, I guess it's August 10s are trading at 58 cents. If this stock does what I think it could, that could be $3 or $4 a share. So this is and it's up 287% just today. Only 56 traded. The 10s for July traded 478 today. We're up 33%. So you still got about 4 weeks with that one. Even if you want to go to the 7.5s, which are currently in the money by $1.15, you're only paying 50 cents premium for something that might be able to go, 12. If that stock goes to 12 or 13, this will be trading about 5 or 6. So there you go. I wanted to point out to you that this works both ways. I have a service, or part of my service includes a list called Boxer Shorts. I want to show you where I pick some of these stocks. Now, I'm what I consider as good a technical analyst as anybody out here. I'm in the West Coast, by the way. And people have, I've got a lot of notoriety, but I'm not talking about myself. The bottom line, the reason I say that is I can spot a trend in a New York nanosecond. When I saw Autodesk form a left shoulder, head, right shoulder, or some sort of topping pattern with a neckline and a support line right there. And not only did it break it, it gapped down and went through it and then rallied back to it. This is a no-brainer bear flag if I've ever seen one. Not only did it rally up to the resistance and the neckline of that head and shoulders, but it did it on low volume with lousy technicals. I told my people, go short. This was at 280. 1, 2, 3 months later, it was 180. And another few months later, it was 160. And basically, the way this stock looks now, Autodesk could very well drop down to the next support level. If we get a bear trend, this will probably be 140, if not worse. But look at the bear flags, the rising bear flag, and each time it came down. This was, by the way, the actual trend right there. We broke out and we covered. Anyone who I told them to cover because of the breakaway gap. Unbeknownst to us, it would also consolidate for a week and then roll over again. So it reestablishes bearish trend. A line right, a very distinct topping, rounding top. Breaks down there. The moving average is already crossed over here. That's a bear flag again. Very similar to what you saw at Autodesk. Now, when this stock was trading at 270, and I was bearish on it, you can go to a 260 put. Not much, didn't cost you much, maybe $3 or $4. And within a few weeks, well, actually it would have expired quickly. You could have rolled them over, but you would have made a lot of money right there. Multiple 100%. Then it formed another bear wedge, and I told my people, if this breaks down, we go short. It broke down again at 248, quickly dropped to 199, 50 points, and then bounced and rolled over. That's about, I know how to spot a top. And these stocks were pretty no-brainers to me. Ambarella was a beautiful long-term trend, right? 1, 2, 3, 4, 5 waves, long-term Elliott wave moves. Left shoulder, head, right shoulder. And this bar down broke the neckline of a head and shoulders top, rallied right back to it, failed. Very low volume traded, and that's a good sign that it's going to fail. And then it formed the bear flag. Not until here did I actually say go short. When it rallied to 156 and started to roll over. I think it was about 140. And subsequently, within a few months, it was down to 68 or 66. That's a huge drop. It's about 65% in only a 3-4 month period. So, and there's another bear flag there, and that's the reason why the stock rolled over again and it's retesting. But anywhere along the way, you could have bought a option a month to 2 months out and made a lot of money on the puts on Ambarella. Chewy, same thing here. Broke the trend here from the little bear flag, came down and bounced. I didn't get really bearish until I saw this double bottom be taken out and a bear flag form. Notice the same pattern again. 58 to 32, another bear flag, and then a double bottom bounce, but it could not get the resistance. That's where it really rolled over. 54 to 22 in 6 weeks. If you had to put anywhere in this area, when it dropped down and formed the bear flag, say in the 40s, and you bought a 35 put, way out of the money, you could have probably bought it 50 cents to $1 or something like that. And look at where it was a few weeks later, probably before expiration too. Crocs was my best pick of the year, folks, I think. I saw this huge uptrend. I kept asking myself, who buys Crocs except nurses? Anyway, it's just one of my pet peeves about Crocs. So this rolled over and broke the trend line. I went short right here when it bounced. I told my people to go short. I think it was 139. It came down, bounced, and 3 weeks later just collapsed from the bear flag, a large bear wedge, came down, couldn't get the resistance and retested. This stock has gone from where I gave it out at near 140 or 50, I forgot the number, down 100 points, 100 points. It's still dropping. Before it's over, Crocs could be in the low to mid 30s, if not worse. Carvana, also one of my best picks short all year. I didn't pick the top, but I did pick it right there when it broke support. This spent 2 months going sideways. When it broke here from the little bear flag, I told everyone to go short. The people in my room who bought puts, I know one guy bought puts that were like 20 points out of the money, and he got them for like 50 cents. Okay. They went from 272 to 19 handle in 90 days. Now, you would have had to roll the options over probably, but they made a lot of money buying puts on Carvana. DSGX, head and shoulder top breakdown, rally, breakout there. But when it rolled over under that number, under 71 and changed right there, it took out the moving averages. That's where I said short it at 70. Within 5 weeks, it was 55. It formed another bear flag, and it still looks lower to me. FN, beautiful long-term trend, right? But look at the head and shoulder top with the neckline right there. Left shoulder, head, right shoulder type, or rounding top, whatever you want to call it. When it broke down right there and snapped back to resistance, I went short at 95. Within 6 weeks, it's 74, and it looks like it could be lower. FVRR, massive top formed over a year. Broke down there, rallied back right there. That's where it went short, 143. From the bear flag, a bear wedge, another wedge, and then dropped into the oblivion to 29 from where I went short at 143. How about that for a short? And it still looks lower with a bear flag, a bear wedge that just broke. Garmin, a mini head and shoulder top and a rising wedge. When that broke there that day, I said, this is going down, baby. 164.5 or something like that was the short. It immediately dropped within a week to 140, 24 points right there. From the bear flag, came down, bounced around for a month, got hammered back from the rising bear flag, a rising bear wedge, another wedge, and you can see the distinct down channel. At no point did this stock break out to the point where we had to cover our short. Going from, I think it was 155 to about 93. And it still looks lower. Like I said, none of these stocks look like they bottomed. INMD, top wedge. This is where, when we went, right there is where we went short at 67. Drop down, rising wedge, drop down, lateral wedge, drop down, bear flag. And again, in mode doesn't look done yet. None of these stocks do. Now, obviously, they wouldn't be on my short list if they look bullish. How about this one? The joint. From the head and shoulder type top or topping pattern, right there was a support. And when it broke there, it was a short. When it formed that little bear wedges where I noticed it to be short at 66. Ran down, another bear flag, came down, a bear wedge, and another one. Eventually, how about 12 handle from 66? Cornet Digital, like a topping pattern, a snapback and a breakdown, a wedge, really broke down hard. It got crushed. This one went from 70 to 31 in a week and a half. Can you imagine buying puts when the first call around 92 and then rolling them over twice by making money each time and watching it eventually get slam dunked to 31? They have a large option chain from what I remember. Yep, enough to make it wet your whistle. Netgear. And look at these charts, folks. Easily spot a top that breaks down and forms a wedge. That's where we said short it. 36, bear flag, bear wedge. Came down, bounced around, broke down, snapped back, couldn't get through. And then formed a new down channel within a larger channel. Eventually making it down to 17 handle from 34 and basically cut in half. MedPace, look at this obvious. Triple top, breakdown through price support and gap. And then here's the ideal situation. It rallied back to resistance and faded and closed poorly. That's where I said this is going lower. 184 within a month, 136, rose up, rolled over, another bear flag. It's a terrible looking chart. Folks, you're going to see the same chart over and over. This is why they call me boxer shorts, because I'm able to spot a breaking trend and follow up negative bearish confirmation. When this broke down and formed a little wedge, even though it hadn't broken price support, I knew it looked ominous. Take a look at the volume on the downside. One thing you need to know about stock charts is the characteristic of the trend is the key, meaning they go up on big volume, down on low volume in a bull trend. When suddenly things change and you see these big red bars with low green bars, that means the trend is bearish and it's changed. This here, 6 weeks or 7 weeks of just drifting lower in a box. This is what we call a falling flag, very bearish. Rolled over from 95, within 2 months was trading at 41, and then eventually made it down to 26. And it still looks like another bear flag and maybe headed to 20. Pretty ugly. Shutterstock broke down from the flag, got a larger one and broke down, rallied back to resistance and broke down. Again, just over and over, the same type of patterns. Upwork is changing the name to downwork from the triple top. Just kidding. Broke the neckline there from the little bear flag. This is where I got really interested in shorting it. That stock had dropped from a 60 to 29 and couldn't do better than that. I knew it's going lower. Rolled over hard. That was an ideal place to put. The 36, at this point, it was 36. Even if you bought the 32 and a halves, within 4 months, this traded down to 23. That had been a monster put trade. A rising wedge ensued, and the declining 50-period moving average, that red line, it could not get through that and rolled over again, and then reached up for it, rolled back off again, rolled over again, forming another bear flag right here. Here's a stock that dropped from 61 to 15, losing 75% of its value, and could have made good money with that one. Workovia, this is what we call an exhaustion gap. When you see a stock run, especially in a 1, 2, 3, 4, 5-wave move, I'll always look for that 5th wave spike up blow off with good volume. When it turns down, it usually gets nasty. This formation is where I really got interested in bearish. It was coming down, it was forming a bear wedge or flag, whatever you want to call this. Let's call it a little wedgie. It broke down, then rallied right back to that same level, couldn't get through, and then rolled over hard from 122 to 63, cut in half basically in about a month, 5 weeks, forming another wedge and coming down as well. Again, if you take my recommendations timing-wise and buy an out-of-the-money put or call, that's my recommendation. I know people don't like out of the money because they can expire worthless, of course. But the kind of percentage moves that you can make when you pick a stock right, and that's my job, timing. If I'm right on my timing and the stock moves in either direction and I'm telling you to buy it long or short it, then you need to buy calls or puts if you don't want to make the big investment. Meaning, you buy 1,000 shares of this one, for example, it's $117,000 when you can easily buy 10 puts or something like that for $4,000 or whatever it was. ACMR is another one that just recently broke a massive top. Look at that. Snapped right back to resistance. That's why I said at 22, this could be $10. Well, it dropped down to 11 and change and bounced, but it's a bear flag forming again. Denali's another. When this stock broke down right there and formed a big bear wedge, I said short it. Now, it did come down, rallied to resistance, thought it was going to break out. It didn't. It rolled over from a bear flag, a bear wedge. Here's another one. And this stock had dropped from where I first gave it out at 51 to 20. This is another one of my best picks of the year. Check this out. So this is a left shoulder, head, right shoulder, massive top, neckline broke down. When it broke down, I saw it break down and rallied for 2 days on low volume and got right to the neckline and started to roll over. That day there at 550 or 55 is where I put out a short for EPAM. 555, within 6 weeks, the stock traded 168, and meaning it lost almost 400 points. And it only took 6 weeks. Pretty amazing, huh? Yeah, it did rally, of course. And when it spiked down here, that day I said, look, it may go a little lower, but I think the stock should be covered. So we covered in the 200 range. It eventually went to 370, so what a good cover. City trends. I see a top, I see a breakdown, and stock stalls for 3 days, meaning it just can't rally. We went short at 58. A few months later, it's 21, and it still looks like crap. Here's a stock I put out when it broke down hard and formed that little bear wedge. If you bought a put at that point when it was 35, within months, it's several months later, of course, and your puts are going to expire, but you made a little money there, you buy some more puts and keep buying puts on a stock instead of downtrend. Here's a new one. It double topped, it broke the neckline, it formed a bear flag. I said short it at 37. And a week later, it's 30.5. At support, may bounce, form a wedge or something, but for me, this is a new downtrend starting. ESTC, another perfect example of what I talk about. When I see a breakdown hard and then a bear wedge forms, I'm going short. It rolled over hard from 117. Within 3-4 weeks, it was 75. The $110 puts, which were way out of the money, made you a big bundle. Look at this bear wedge. When that formed, I said, if they break this wedge, it's going to smack it. I waited till I saw 85 break, and I said, go short. 85 to 50 3/4 in 2 weeks. Gravity, one of my favorite longs. I bought this stock here, traded out, and bought it here, traded out early at the double top, and look at where it went. Denver got back in. But look at that breakdown wedge, bear flag, another mini wedge, another flag. It tried to bounce and base out in this area, but it hasn't broken this line. That's your declining top line. Even if this is an overshoot, you can still call that the trend channel. And so for me, if it doesn't go soon, it's going to get hammered. It was down 3 points for 5.5% today. It looks like it's headed for a retest of the lows here or worse, possibly 26 to 28. Wouldn't that be something? What was the high? How about 239? 90% down. Houlihan Loki, head and shoulder top, breakdown, bear wedge. That's where I said short it. At 100, I remember even. It's made it down to 75, and it still looks lower. My next target, 72, and maybe even 66. So this is on the short side, but I want to go over some stuff that I did on the long side, just to give an example of, if you trade the trend, if you have guidance from a professional who's been doing it for 55 years, like myself, for a very small amount of money every month, you can make a fortune trading options or just buy my stocks. But the bottom line is, I have people who buy some of the stock and buy some of the options, because if the options don't work, eventually my stocks usually work anyway, if my timing's off. JB Hunt, when this got slammed, it formed the bear wedge right there and rallied in the sun. I said, this is short of 175. For a couple of days, it made it up to 180. I said, don't cover till you get to about 182. And that was because of this here. Let me show you. See these bottoms in here? It never got there and then faded hard. 181 to 154, 27 points. That took about a week and a half. One of my favorite charts of the year, Ferrari, symbol race. Look at this chart. From the 20s, a year and a half later, it made it to 278. But it formed this little head and shoulder back pattern. When it broke, that's why I said this is a short, 240. Within 6 weeks, 178. Rallied big time and broke down again. I said you could re-short it now, and it certainly got crushed. And one of my favorites, Robert Half, because I used to be in that business. I owned an executive recruiting firm many years ago. Left shoulder, head, right shoulder, and that was a breakdown. And when I saw it did the same thing as a couple other shocks, couldn't rally, I said, let's short this one at 99. And 6 weeks later, it's 76. The puts at 99, the 95 puts, 4 points out of the money. Would have made you, and then it would drop 20 points. You think you made a few dollars there? I think so. But that's the key. Trade the trend, up and down. Perfect. C Unlimited was one of the biggest picks in the last few years. When it broke out there, it was trading at 13th, 14. 2 years later, it hit 250. A year after that, about the all-time high, 372 from 26. And then the big rollover and the bear flag, the bear wedge, there's a rising wedge, bear flag. got crushed all the way from 350.60 down to 53. Huge drop. Now it looks to me kind of bullish. This is a V bottom with right hand extension. Like I look for bottoming patterns. Many stocks bottom with a V bottom and a platform. But this is dangerous to buy any options on until we get a distinct trend change, which hasn't happened. Hasn't even taken out the declining tops line or lateral resistance. Should this stock get above 90, you can go long or buy call options for 120, 30, 40, wherever. Let's look at today. Here's another example of V bottom right hand extension. Oh, this one is more of a falling wedge. I like the reversal on stock, but I need to see better volume. But this is on my watch list. Look at the intraday pattern. Early on, it started with a pop and little coil when it broke out right there. That's where we went long intraday for a day trade. 1865 to 21. Advanced Micro is another example of a stock that we've been long on occasion 8, 10 times in the last couple, 3 years. And when it broke out there, when it broke out there, when it broke out there, there, et cetera. Right now, it's in a massive 1, 2, 3, 4, 5 wave decline. Now today it bounced from 79 to 85 and change. Might be turning around. I think the big resistance now is 91.5. If we get through that, you might see 102.3. But I think if the market turns around, semiconductors lead, AMD could be a move back to 115 to 125.30. Obviously, energy sector is powerful. Here's a stock I've been watching called Prudhoe Bay Oil. At one time traded up in the high 30s, and they knocked it down to $1 and change. Ran up and formed a wedge or coiling base pattern. And there's your breakout of the wedge with huge volume. See, when I see this kind of a pattern, and I recommend a stock if I do, it's a no-brainer for me to say, okay, the stocks, if there are, let's see if there's options. Yeah, there are. But so my point being, if there's options and the stock is 4 and change, you buy a 5 or 5.5 call for a little bit out of the money, and then look at what it did even the next 4 weeks, it went up to 10. That would have been a huge percentage gain, probably on the order of 800 to 1,000%. And if you kept rolling it over and buying it again, look at that. One of my favorite trading stocks all year has been Peabody Energy. From the V bottom and a falling wedge there and there and there. But the big key was for me, when it broke out there, I knew it was on its way to much higher levels. So at 6 and change, I put a swing on it. And it went up to 17. It almost tripled in about a 4-month period. Right there. And again, if you buy puts or buy a call far enough out, it'll cost you more, but there's some safety involved. You have a lot of time. On the other hand, you can buy a shorter term call and roll it over to the next month, usually at a profit too. So here's a falling wedge breakout. Breakout there was key. This is where we went long. And now it's forming a left shoulder, head, right shoulder. I think it's dangerous. So I would be careful with this one. In the uranium sector, check this V bottom with a platform out on CCJ. Chemical is one of the biggest purveyors of uranium, if not number 1 in the country right now. And when this stock popped right there, right here with volume, that's where we went long. That was about 11. Within 90 days, it got up to 19.75. And within another year and a half, it was in the low 30s. Again, the reason I'm showing these patterns is to just say how you can benefit buying calls and puts on my longs and shorts in my site, if that's what you want to do. I know most of you are here for day trade, for option trades and option knowledge. That's fine. I am not an option expert. I know enough about options, basically about options, to be able to make really good money with it just by following my picks. That's what you can do too at TradeOutLoud.com. Look at this coal stock, Consolidated Energy. Where did I get really interested? Right there. I'll tell you why too. This line seems to be logical resistance. When it went 1, 2, 3, 4, 5, broke through it and then pulled back, the breakout here is what I really was interested in. About 9 or 10, within 5 months, 35. eventually 59. So is it done yet? Until it breaks down. I recently put out, this is interesting too. So I recently put out a long swing on CRISPR when it broke out here that day. It was trading about 68. Within a week and a half, it went up to 75 for 7 points. I know for a fact that the calls doubled. Today, they had unfortunate, very negative news, and I'll show you what happened. Slam dunk. 75 to 60, folks, before bouncing. Now, this can happen with any biotech, that's for sure. But my disciplined traders, I think we're stopped out at 66, right there. And so even though you got a loss, it wasn't as big a loss as it could have been or should have been if you weren't stopped. I implore everybody in my room, I come out daily, pre-market and during the trading hours, and give out buy alerts. I tell you what the targets are, what the stops are, what support and resistance is, and you're on your own. I don't tell you where to buy it. I tell you what to buy, and I tell you the timing's right. You have to decide in my room exactly where to put in your order. Another perfect example of a stock that we do well, and I don't know if this must have an option chain. Oh yeah, look at the moves in this stock. These were trading at $5 and $6 a share, and they're trading in the 20s and 30s. And here's why. When this stock came across the triple top right there, that was back in February 28th, it was 116. I gave a target, kid you not, of 250, and they thought I was crazy. Why? I connected all these tops and bottoms and projected from there that it would reach there or there, but sometime at that level, a few months out, it was going to make that level. So the call options, at the time they were 130s and the stock was trading like 125. We're trading at 2.5 or something. When it got to 257, you can imagine where they were. Phenomenal move. That's why I'm saying you can sell when you double or triple. You can always sell half your position and ride the rest. But and by the way, that was an excellent presentation, but the one before me from Mr. Headley. They know what they're doing over there at Big Trends. I highly recommend them. But if you're looking for a stock picking site, there's none better than the TradeOutLoud.com. I would highly recommend you come in, spend a couple of weeks with me, and you'll see what I mean. If you're an option trader, which most of you I assume are, then I think you're going to benefit by my stock picks by going long and or short. I showed you a bunch of shorts that were monster picks on the downside, where the puts would have been phenomenal over the last, even since November. November is where everybody thinks, by the way, that the bear market just started. Well, guess what? If you look at most trends, they topped in November. We've been down for almost 8 months in some, for lots of stocks. And so most bear markets, for me, last somewhere between 9 months and 2 years. But with computerized trading and everything compressed time-wise, I believe that the recent low we had in this market may be an important one. We'll see if there's what kind of follow-through we get. A lot of skepticism out there, and that's what you want. Joe Granville, some of you may remember him, coined the phrase, the market climbs a wall of worry. I'm a big believer that stocks discount the future by 6 to 9 months in advance, and that when the news is negative and they climb and nobody knows why, and they're shaking their head, they're scratching their heads, they say, how can the market be going up with inflation, with interest rates, with the war in Ukraine, with all the other stuff that's going on, with supply chain shortages? You can go on and on. It's a perfect storm, but the market's already reacted to it. Now, it may not be over if earnings get dramatically affected and money gets too tight. Of course, they can extend this bear market lower. If you recall, NASDAQ dropped, I think it was 78 or 80%, top to bottom, in 2000. So it can happen again. I don't think so. I don't think this is that kind of economy. The dot-com bubble was a joke. And you can talk about Bitcoin, which I am not a fan of, by the way. I told everybody to sell at about 50,000. As you know, it got down to 17 recently. It's 21, I think, today. But I'm a big believer in technical analysis of stock trends. And once you do it for years, and I've been doing it for over 50 years of trading stocks via technical analysis, I believe my site is one of the best sites in the world for day and swing trading. And I challenge you to come in for a couple of weeks and check it out. We can move on a little bit further and talk a little bit more about some other stocks, but I'm going to give you more and more examples of the same thing, basically. DAC, by the way, recently went short. I said this is a head and shoulder top and a rally to resistance to fail. Short at 88. 3-4 weeks later, 65. Is it done? It may be just beginning, but there is key support in this range, and that's why it was a cover there. But if you bought the puts when it was 88, I bought the 85s, and here it is in the 60s, you're doing very well. The stock I like a lot in terms of the long-term pattern, the way it trades, DQ, it's this Chinese semiconductor. When it broke out here, it was a big, big winner for us. It went from 18 to 100 and what? 120, 130 from 18. Huge, almost a 18, 20-fold increase. And then this. Now look at the base that's formed in the breakout, the retest. And today, popped from 58 to 67, closed 66.90 up 846. I say this is going higher, looking for 80 short term at 66.90. There may be an interesting call play there. Really neat little low price energy stock, EGY. Terrific trend. Almost every stock has options. Look at some of these are trading cheap. Oh, looks like my free. There you go. Food is one of my favorite longs. I bought this stock when it broke out there. It went bonkers. Unfortunately, I got most of my people out there. But that trade went from 14 to 33. I don't know why. For some reason, I did not go back into the stock. And that's the best time, by the way. When you have a stock that's in a strong trend and you sell it too soon, what's wrong with buying it back, even at a higher price? You know that Jesse Livermore, one of the most successful young traders in Wall Street back in the 20s, his favorite expression was buy high, sell higher. Meaning he wants to buy stocks that are running into no overhead resistance, a stock that just is blue sky. And the mistake I made with this stock, and we all make mistakes, is that this is a perfect bull flag, three-wave corrective. Look where it broke out right there. Now, I didn't know at the time, and neither did you, but check this out. You've gone back in that stock, man? Maybe not. Look what it did. I'm sorry, right there. Maybe not, but it did break out at 47. Traded up to 130, and that took 3 weeks. And eventually, 200 and change. Now, it came down pretty hard in here from the V bottom, spiked up to resistance right there, pulled back orderly, and broke out again. Now, recently, it got up to resistance and backed off and formed a nice little flag. Notice the volume. When a stock pops on heavy volume, it pulls back to support. And by the way, the moving averages and the price support, both right in the same place. I'm not surprised it held. The breakout of the wedge, a pop today of 7 points. 715 it was up today, 16%. Tells me the stock goes higher. I'm looking for a move to 65. It's trading at 51. If the market cooperates, the 55 call options might be 6 or 7 or 8, probably trading at a buck. And so, and Lucid, everybody was all excited about Lucid when it came public, right? Look at that. And then there, but it got slam dunk. 1, 2, 3, 4, 5 waves down, the V bottom of the platform, a little inverse head and shoulders, and then a retest. Nice recovery. I would play it safer and say, wait for this to go over 20 3/4, and then go long the 2250s or the 25s. This is a promising V bottom of the right-handed extension, and if it does breaks out of that zone, it's going to go. A lot of the Chinese automotive stocks are looking better. Look at Li Auto. This is an island reversal right there. And then it came down and tested and ran straight up the chute. Look at the breakout of this declining top sign with a gap right there. And it just kept going. Interesting stock. A little overbought short term. Very strong momentum. Here's a company that I recommend on a longer term basis, not short term because I don't like the chart pattern. But MP Materials is the second largest rare earth company in the world behind China, largest in North America. I think eventually this is going to be a much bigger number. Fundamentally, that's a fundamental talk. But even if I say that, I'm still saying stop it under 30. Do not let this break down. You got to be technical. You got to keep the technicals in mind at all times. Pinduoduo, another long-term decline. A V bottom and a right-hand extension, a breakout right there, and then a break through this recent high right there. A pullback wedge and a breakout again today. For me, 77 and then maybe 85 are targets. The measure move gets me up to somewhere in the 90s. So might be a really interesting call option if it breaks through this little double top right there, which is about 66.5. RCMT, one of my best swing picks this year. Broke out right there. We went long. Under 10, I remember, like 9.75. 2 weeks later, 14. Pull back, formed the wedge. Didn't break support. Low volume ebb. Breakout with volume and a breakaway gap. We went, reiterated long, flagged, popped, pulled back, popped again. Eventually made it to both of my targets at 28.82. I think my targets were 24 and 28, so we made that, and now it's pulled back. But if you were, let me see if they have options. Yep. The point is, anytime I recommend something, go check out the options, see what the out of the money options are trading for. Look, I'm giving you a stock that's supposed to go higher. So we're looking for a stock and that's going to go higher with options that a little bit out of the money so you can make maximum money. That's my way of doing things. For example, when it broke out at 12.5, you could have bought even at 15. And 3 days later, it was 19. So you could have made a lot of money immediately. But if you held it a little longer and or rolled it over, you would have done well, very well. Here's a stock I like a lot currently. Look at this chart pattern. Explode, falling channel. Explode, falling wedge. Explode, a flag. Popping out again. This is a very market popular stock, Veru, and I don't know why. But gets through this triple top, it's Katie bar the door. Where does it stop? No brainer stop under 11.5. But if it runs 15, 17, 20, 25, all doable, in my opinion, particularly if it takes out the triple top. Keep an eye, look how strong and green the technicals are. Unbalanced volume holding steady while the stock pulled back. Very nice. That's a stock that I would seriously look at a 15 option. And just to reiterate, this little stock Zixi, which broke out today, I think it's got huge potential. Probably a double from here, something like that, maybe 80%. So at $8 or $9, look at the 10s. See that may be an interesting short-term trade of double, triple, quadruple. And that's pretty much it, folks. I just wanted you to get a flair for, number one, what I do technically, how I look at stocks, why I look at certain patterns as potentials for momentum plays, and how you can take advantage of that as an option trader to make a ton of money based on my picks and my timing. Timing is important, especially in options. You don't want to sit somewhere where you buy an option, sit with it 2 weeks. It's time deterioration. It's disheartening to watch the stock go nowhere and an option start to flitter away. So if you are an option trader and you're looking for a guy with timing that can give you the right timing on certain option trades, come to the TradeOutLoud.com and sign up for free trials. Like I said earlier, right there, start a free trial. Just come in and sign up, register, come into the live trading room every day. It's a really cool place to be. I do a nightly charts of the day video. I do a weekend comprehensive 1 hour video that tells you all about what the indices are doing, what the underlying technicals are doing, what the NASDAQ 100 leaders are doing. I look at a bunch of shorts and longs and it gets you prepared for the following week. That's every weekend. So my site is chock full of information, chock full of stuff you can use to make money in the market. And this is Harry Boxer asking you to come join us. And thanks for being here. Appreciate you being with me. If there's time for some questions, David, I'd like to take some.
We have a few minutes if anyone has any questions.
No questions, huh?